All right, everybody. Ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip, and once again, I will be your presenter for today's webinar, Market Movers, 28th of March. Let's see what the end of March has in store for our trading opportunities. Just as usual, if you look at your webinar interface, you can see that small questions box, and please type in any questions that you might have. And right now, I would appreciate a very short yes or why in that questions box, just to let me know that both the audio and the screencast are working properly for you guys. Perfect, Chuck. Thank you very much. Really appreciate it, guys. Yeah, today's session, just as usual, is scheduled to run for about half an hour. And before we get started, we have our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through those carefully and make sure that you're really comfortable with them. Essentially, this says that trading, of course, involves risk, and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live section of today's webinar. We were looking at live charts, markets, which I think are interesting right now. But however, that's just me. It's not a recommendation. You guys have to decide on your own. What is your trading strategy? What is your trade plan? And how you want to implement that trade plan. So please make sure you're okay with this before continuing with the webinar. And that being said, here is the risk warning from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your own responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just have a look at the agenda. And yeah, once again, I already mentioned your trade plan in the risk intro. You guys want to have a trade plan. You want to have a trading strategy. You want to know exactly when you want to get in and when you want to get out. And you want to plan your whole trade before you actually open that position, open and enter and submit the first order. So it's all about building your trading strategy. And in the end, we want to have a look at strategies that have both a opportunity in a long market and in a rising market and a descending market, long and short positions. Market scenarios, possible outcomes and setups to consider. And then we want to look at how you can apply those Nadex contracts, both spreads and binaries, when it comes to implementing those strategies for your own trading. Now, let's just jump directly over to the markets. And today I want to kick it off with good old euro against the US dollar. We're looking here at a spot forex chart. Remember, those Nadex contracts have those markets as underlying markets. So basing your analysis on those markets, on the spot market, definitely is not a bad thing to do. In the end, the prices which are the right ones to consider for settling those Nadex contracts will be always those printed on Nadex. And if you have questions on how these prices are actually derived and how they are formed and how many prices go into the formation of the final settlement price, all this is beautifully documented on the Nadex homepage. So please take a moment of your time and check those if you're interested in the technical details here. Now, let's get started once again on those higher time frames. I want to understand where the market is and where the market has been coming from. And if we zoom here out on our monthly chart, you can see that going back to 2008, the euro was really strong, 1.60 against the US dollar. But since then, clearly lower lows and lower highs. And just recently, it seems that the market has found some kind of support level here around this 1.05. You will realize we are not using any sloping trend lines because we think those sloping trend lines are just not as precise. They don't give us that much of an advantage when it comes to trading those markets compared to those good old horizontal trend line or horizontal lines of support and resistance. And A nice thing or important thing to notice here is once we pick those levels and start to draw them in, we can see that the market has reacted against those levels. Yeah, let's pick that one here, for example. Let's make it a little bit larger. Style is okay, but we will increase the weight a little bit and set it as a default. Now you can see price touched this level here back in 2006 when we started to rise higher. We tested this level here on the way on a try to rebound here at least once, a second touch here. So do I think that if price continues to go higher here, that this level might become interesting? That do I expect that the market will react to this level once again? You can absolutely bet on that. I don't know what the final outcome of that test of this level will be, but I pretty much know, and I'm pretty sure that if I find a trade setup right now that can somehow make use of that level or keep me out of a potential setup because this level is just standing in the way of reaching my trade, reaching that target, I won't be taking that trade. So definitely always put those levels on your charts, and you see how easy it was to find those levels. You just take your horizontal line of support and resistance and you start to move it around on the chart. You just try to find an area where price has been reacting to several times. We can see price reacted here several times, a little bit there, a little bit there, here pretty much there. So just in case price is pushing higher, 136 something. David is saying, looks like it is testing going lower to me. Absolutely beautifully observed. Thank you very much for that. Obviously, what we're seeing here right now is still a downtrend. We see that the market has been pushing significantly lower here. Now, we had a higher low here, but we made another lower high here, and this lower high has been followed now by another lower low. So we have lower highs and lower lows on the monthly chart. This definitely is still a downtrend. You're absolutely right on that, David. Thank you very much for that comment. However, why am I looking to those higher levels? We want to get an idea about what the market might be doing next. And an important thing to consider and to note is always indicator momentum. We want to see indicator momentum converging with what price action is showing us. And this means if price is making lower lows, we want to see this good, strong momentum being confirmed here by our indicators. Clear lower lows here, and sure enough, MACD and RSI made new lower lows as well. But however, here just recently, if we compare the level, and let me draw that in here. At that point in time, this was the value where MACD made a low. We made a low in price, and MACD made also a low. But right now, we made a lower low in price, and see where MACD is trading right now. It's definitely trading much higher than where we have been in the past. Same thing definitely is also true, and this RSI is pretty much sitting at the 30% line, and also here not as significantly diverging as we see in MACD, but also RSI clearly is not making lower lows. So we have indicator divergence with both MACD and RSI on the monthly chart for this recent lower low, and this is, for me personally, definitely a sign of weakness. I think that this is an early warning sign that the bears have run out of momentum, out of steam, and that it might be. Would I start investing on the monthly chart to the long side right now? Definitely not, because the trend still is down. But I get a lot of early warning signs here, which tell me might be time that the bulls will be taking over. I don't know for sure, nobody knows, but the chart definitely is weak enough, or too weak for me, to consider a short position right now. Or, you know what I mean. I think the market is showing too little weakness to consider a short position. David, great question, great statement. A lot of trading is a waiting game. You're absolutely right. And this is a big mistake that most beginners make when it comes to trading. They think I have to trade right now in the market. I'm sitting in front of my charts. I want to be trading right now. So put on a trade. No, at least that's my style of trading. I know what I'm waiting for. I want to see that perfect setup. And once I see it, I'm in. I know how to trade that setup, and I know that if I trade my perfect setup, I should be winning more often and my winners should be bigger. And this is the edge that I have for my trading. If you just put on one good trade per week, you're outperforming the majority of the market. It's really that simple. It's not about trading the shortest time frame. It's not about trading most often. It's about taking the best setups, the high probability setups, and staying consistent with your trading. It's not about it's not about the heat of the moment. It's not about gambling. If you just want to click something to see your positions and want to feel the heat, I think personally you're probably better off going to Vegas for that. Trading is about statistics, about probabilities, and yeah, pretty much about waiting. You're absolutely right on that one. So monthly chart, it's a downtrend. However, we see some weakness coming into the market, and probably I wouldn't be surprised if we start to see the price is pushing higher again. It may be going for a test of this 116 level. It's a monthly chart, won't be happening right now, but mid perspective could be the case. Also, another sign of weakness, you can see how the 10-period moving average has now pulled over the 20, and now it's falling back into place. But however, good strong momentum, good strong trends look different. Just look at what the market phase looked like here. 10, 20, 50, beautiful fanning pattern, a lot of strength in the market, coming back to my moving average buy zone and pushing higher again. And just see how deep those pullbacks have been here. So all of this is adding up. I don't see a majority of weakness and downward momentum here. Now, if we come to lower time frames, for example, let's have a look here at the weekly chart. And once again, sorry, I always pick the wrong direction first. On the weekly chart, we can now see that the trend has already started to turn into an uptrend. Why? Because this week, just here, we made a higher high. We made clearly a lower low compared to this one here. The 10 has already crossed above the 20. Good momentum confirming here this move higher. So pretty much with MACD and RSI, all this here, the trend on the weekly chart definitely is already up. Very weak downtrend on the monthly chart, fresh uptrend on the weekly chart. And now let's have a look here at the daily chart. And push higher, pull back, push higher, pull back, push higher, pull back. And this pattern repeats itself over and over and over again. And you can see how that worked here. And pretty much as long as we're making higher highs and higher lows here, this is pretty much what I'm looking for. And so essentially, I'm just waiting now for another pullback that takes me here to our moving average buy zone, something about the area where the 10-period moving average is right now. And it doesn't matter if that is the simple moving average or the exponential one. The way we're using those moving averages doesn't really deviate, or it doesn't change too much. It's maybe an entry a few pips earlier or later, but the big picture, the way we use those moving averages here is just the same. So I'm waiting for a pullback which goes a little bit deeper. So on the daily chart, I would just assume that this market might be going lower even a little bit further now. So if we switch here to lower time frames, for example, let's have a look here at a 15-minute chart. We can see the market is pushing lower here. Overall, it's a range-bound market with increased volatility. It's not really clear what's going on here. However, coming from the daily chart, I think that maybe a short-term move to the downside might be more likely to happen than not. But remember, I don't know. Nobody knows. You have to make a lot of assumptions, and you have to stack the odds in your favor. And once you have an idea about what the market might be doing, and you think it's a high probability idea, you trade that idea. And if you trade it often enough and your idea is good enough, you should be coming out ahead. You should be winning more often. And if you do proper trade management, you should also be winning bigger. Now, let's just think and have a look at the Nadex platform here and decide if maybe we arrive at the conclusion, or potential setup could be to trade this market to the downside. Now, which contract could I be trading here? Which contract is trading at the money? Those of you attending those sessions regularly know that one where the price is pretty much close to 50. So probably the market is trading here right now around the 1.0840 strike price. And by the way, a very neat new feature is if you click here on this binary ladder chart button, those charts open up. And if you haven't logged into the demo account recently, give it a try. Those are all new HTML5 based charts, much improved about what we had there earlier. It's not there yet on the production system, on the real live trading platform, but Nadex will be rolling out those very shortly. So log into your demo account, give those charts a go, and you can easily and beautifully see here what's going on there and how to use those charts, get yourself familiar with them. And what's very nice, you see those strike prices here directly on the chart, and you can be trading here directly from the chart. So assuming that I want to short this contract here because I think price would be going lower, I could be just clicking on this contract here, and the order ticket pops up, and you see it's just as easy as that. And I could be looking into selling maybe, let's say, one contract here. Why don't I think that, why do I think that this could be a viable choice for a strike price? Well, it's a little bit in the money, which means the market is currently trading a little bit above it. So I'm getting 55 bucks for selling that contract. What's my risk reward ratio? Well, my maximum profit would be price is dropping below this level, and I'm going to keep those 55 bucks. If the market, however, is rallying, I have to settle this contract for 100. You know, the payout with a binary option is always either 0 or 100. So my maximum loss would be 45. Market has been moving a little bit already in my direction, so I'm just placing that trade right now just to show you guys how easy it is to open a position and see how easy it is to open that position and use the interface. I sometimes get the impression that some newcomers to binary options are a little bit intimidated, and that's what the demo account is there for. Log in, open that demo account, place some trades. Those trades don't have to make any sense. They should just be there on that demo account to learn about the platform, to learn about the handling, to learn how to put on a trade, to offset maybe an already existing position, to scale out of a position. Larry, sorry, every time I have an IT background, so I'm calling live systems the real trading platform. That's always a production platform to me. That's just me. If you're not logging into your demo account, you're logging into the real platform. Those charts are there currently on the demo platform, but they will be coming to the real live trading account platform pretty soon. Sorry for any confusion that I might have caused there. All right, so we just opened that position here. You can see if we close it here, you can see that trade currently is still on. Just put it on here with this expiry daily 11 p.m. And yeah, -1. It's currently sitting at a loss. Doesn't matter if it's a loss. This was just for demonstration purpose. By all means, please don't follow me with those trades. Those are not trades I would be taking right now because, as we said, trading is a waiting game. I'm waiting for my setup. This was not it. It was just to show you guys how to place that trade. Now, you might be saying, yeah, I see that the market is still going higher, so I'd rather take a trade into the opposite direction and speculate on higher rising prices. And we could be looking here, for example, at the weeklies. And you could be saying, why not have a look at maybe that contract here? Now, the price of 31.50 to 41.75 is telling me that this contract is a little bit out of the money. The underlying market, which is currently trading right here, is not sitting there. So it has to travel a little bit in order to be in the money, to be worth something at expiry. Now, I could be buying 2 of those contracts right now. What would be my maximum profit? Well, if I bought those contracts now for 41.50, my maximum profit would be the distance, the difference to 100. So 2 times the difference, 100 minus 41, equals $116. My maximum loss would be just those 83.50, which I've paid right now, or would be paying for that position. So you could decide, I think by the end of the week, when this weekly option expires, price could be rallying higher, and I could be just placing that trade. And you see the trade is live. Now, I opened just 2 contracts. The question is, do I have to wait all the time until those contracts expire to see if it's a winning trade or not? No, you can actively manage that position. The way to do that would be just now to say, okay, I bought this contract right now for 41.50, but I don't want to wait so long. I don't want to wait all the time. If it's possible for me to just a second. If it's possible for me to sell one of those contracts, maybe for a price of, let's say 60, then I know that I already have a profit of about 20 bucks for one contract, and I want to lock that profit in. Or if you say, okay, let's take it to a price of 80. It's a limit order, it's sitting there, GTC means good till cancel. I will only, or Nadex will only execute that order once it can get a price of 80 bucks for that contract. And I'm just placing this order right now. And you see that order has not been executed. Why? Because the price is definitely far away from 80 right now. But if price moves higher and this option is trading at 80, one of those contracts will be closed. What does this do for me? Well, this trade actually became pretty much unlosable for me at that point. Why? Well, I have taken a profit of 40 bucks on one contract, and the maximum loss that I can still take at that point in time is 40 bucks on the remaining contract, those 40 bucks which I just have paid now when I opened that trade. So I already then would have locked in 40 with an absolute risk of 40. Those two would nullify each other. So in the end, if I take partial profits here in this example at 80, that option trade would be pretty much unlosable for me at that point in time. That's proper trade management. Visit the archives, have a look around for our other webinars and the recordings and see what's going on there. And proper trade management and scaling out of positions, a very powerful technique. And this is how you could apply that with those Nadex contracts. Chuck is asking, why not a 3 p.m. daily binary? Thanks. It perfectly comes down to your own personal preferences and choices. Let's just have a quick look at, it doesn't matter now which contract. And we open those charts again. Just a second. Yeah, here we are. Now, the question is, and we're looking here, by the way, at a 30-minute chart. If you want to change the frequency here on that chart, you just click on the chart somewhere with your left mouse button, and you see here now those time frequencies. And if you're looking for a 3 p.m. daily binary, this would be about, if my calculations of time zones and stuff is not too much off, I think this should be something now like a 3.5 more hours. You have to balance in your head how fast can price travel in my direction, how fast is price moving right now, and is it possible for price with the current speed and my assumption of future speed to hit my strike price with just 3.5 hours left on the trade. You have to balance 3 things when it comes to trading binaries. The first thing is always the probability that this trade is going to work out, yes or no. A major component of that is the time left until expiry. When does this contract settle? Check the contract you just mentioned would be settling in about 3.5 hours. That contract, which I have picked just before, just would give me a little bit more time for market prices to move and play out in my direction. Is one better or the other? No, absolutely, I can't tell you. You have to decide for yourself, what do you want to trade? How fast is the market? Which time frame do you want to trade? Many people prefer those ultra short time frames, looking for even shorter options and expiry times than 3 p.m. Nothing wrong with that. You just have to understand your game and what you're doing there. Probability, time to expiry, this together with volatility gives you the speed and how far price actually could be traveling. And the next thing is you always want to balance the probability with the reward to risk ratio. If you are risking just $1 on a trade with the potential to make 99 in an extreme example, the reward to risk ratio on that trade would be outstanding. However, the probability that this trade is going to work out is from a statistical point absolutely small. And probably it depends completely on your personality, but I for myself, I wouldn't be considering such a trade. I want to see a decent reward to risk ratio, something larger than 1, and then I'm going for probability and my assessment of how fast and how quickly the market can move in the direction that I'm looking for. All right, guys, Chuck, I hope that answered that question. I would be now just quickly, and you see prices going lower. I would be just quickly switching back to the last market that I wanted to cover today are again our US indices. And just briefly, we have seen some weakness coming into those markets. And pretty much I just wanted to confirm what's going on there. And you start to see here on the weekly chart. Last time when we put in our Fibonacci levels, that retracement here just recently with this week's candle came pretty close to hitting and testing those levels. You remember the 50% retracement from the most recent swing has been or is clustering with the 23.6, which is a pretty weak Fib retracement. It's I'd much prefer to see a cluster with a 38.2 from the next higher time frame. But yeah, it is what it is. We came pretty close there. And if we look at the daily chart, and I think this is currently here really the more important thing to note, we are still sitting around those high levels. And you could say nothing wrong with that chart. Again, it pays to be precise. We have a high, we have a low, we have a high, which is a lower high than the previous one. And now we clearly made another lower low. So on the daily chart, the trend most definitely here has changed to a downtrend. Being confirmed here that the 10-period moving average has crossed below the 20. I don't care about the cross. Doesn't trigger anything for me. It's just another confirmation that, yes, it's a downtrend and we're definitely losing momentum. Talking about loss of momentum, you can see while this, let's put that level in just to highlight this here. Yeah, it's not just by eyeballing, I was close to say it's been pretty close to making a same high, but just compare the distance that we're seeing here with the distance that we are seeing here on our, here. At that, once we made price made this high here, compare how much momentum had been lost here in MACD and how much momentum had been lost here in RSI. So again, clear confirmation that a lot of good momentum has been lost here, and price currently, yes, we're pulling back. However, I would assume that once we have hit this area between the 10 and 20, I think it's a little bit more likely, at least in my book, that we will start to see a push lower. And is it a setup now here for a short trade on the daily chart? Most definitely not. A lot of things are not there yet. Again, it's a waiting game. I think that was, yeah, David, that was you. Definitely it's a waiting game here, but I don't have to trade the daily chart. I can now switch back again here to my lower time frames and see if I find some setups there. And you can see we had some setups here happening on those lower time frames, 8-hour to 4-hour chart. And now just recently price is pushing higher once again. Would I be trading that market right now? No. I'm just getting mixed signals. Monthly and weekly are still looking pretty strong. The daily definitely looks down at the moment. The 8-hour chart had been looking down at that point in time here as well. However, if we see what's going on there, 15 is already pointing up again. 60 is pointing up again. 2 hours is definitely showing strength. Clearly higher low here. Way too many mixed signals here for my taste. So I'm not interested in the S&P 500 right now, but I just wanted to continue that analysis that we shared there over the last webinars with this market here. And also the the strong guy, the strong index, which has been the Nasdaq 100, of course, also here looks much stronger than the S&P 500. However, also here clearly lower low than the lows that we saw before. So again, a lot of pressure is coming here onto those indices, and I would be really reluctant looking into long positions here on those markets. All right, guys, time is pretty much up again. Time flies. Those of you who have not opened a Nadex account yet, or be it just a demo account, again, remember those sweet new HTML5 based charts. Consider opening that account or registering for a demo account. There are many different ways for you to be in touch with Nadex. You can see what's going on there and how easy it is. You saw how easy it is to trade those markets on during the webinar, and here you can see how easy it is to be in touch with Nadex, just in case if there are any further questions. All right, guys, that's it pretty much for today. I hope you enjoyed today's session as much as I did, and that you learned something new. You saw something new and useful there. Sign up for other webinars. Would be very happy to re-see you guys there again. And just as usual, after this webinar, there will be a short survey. Any feedback is really appreciated. In the end, we're running those sessions for you. So any feedback that helps us to improve and to meet your expectations would be really great.